portfolio is too domestic, this is a big risk, we need to diversify, we need some global strategies in the portfolio to diversify. So I think for some it's becoming rational, logical to build stuff that works outside Japan. And then things start to very, very slowly flow in that direction. So maybe the wind is slowly turning, but I also suspect it will take quite a long time.
Give it 10 years, right?
Yeah.
But yeah, stuff is changing. There are good people coming in.
Yeah, and to add on to that, it's changing, but it's not gonna change to what we think it's gonna change to. It's gonna change to its own definition, because I agree with you that the VC funds that are available out there are small compared to what we would traditionally think Silicon Valley has available or has historically given to startups to be able to scale and grow. And then that's one reason that there's not a number of unicorns that Japan is wishing to have. That's one reason, right? The number, that number that's given to the startups is not that big. But again, that goes back to, I guess this is the answer to everything, but culturally, they want to see results, they want to see traction, they want to see, proof of concept, blah, blah, blah. And a lot of startups don't have that, right? When they're starting out in an early stage, especially. So that's what they want. They're, oh gosh, I hate to say this, risk averse, right? Even I don't like that concept, but really that's what it boils down to. And so whatever it becomes in 10 years, hopefully, it's not gonna be what we think it's gonna be. It's gonna be something totally different. And that's what I'm discovering in my own research.
Ooh, yeah, thanks. Last topic.
So part of the problem is that the majority of VCs, and what you described there, Tobias, is CVCs to a large extent, right? Corporate venture capital funds. So one of the unique aspects of the Japanese ecosystem is that large corporations that are sitting on these war chests, they have lots to invest, it's undeployed capital. What they're trying to do is create these CVCs, and in effect what they're doing is outsourcing their R&D department. They're looking for new ideas, they're looking for people who can execute quickly, they're looking for these bright, smart people who think a little bit differently so that they don't have to do that in-house, and they're looking for an acquisition. The problem with that model is that the startups then tend to exit too early. And it's the same problem with the growth market, used to be the mother's market. People are IPOing too early. So if you're exiting too early, all of that dynamism, all of the ability to challenge the incumbents is then lost. So you get this rocket ship, it's creating all this energy, and then it just tends to fizzle out. IPOing too early is a tragedy. It means all of that energy, all that potential is lost, and then it plateaus. So it's the other reason why there aren't sophisticated angel investors, because they've exited too early and now they're locked into their M&A contract, or they didn't quite get enough funds to be comfortable to really have the confidence to be a good sophisticated angel investor or to start a VC fund. So it's pretty rare to have that real successful launch.
Yeah. Sorry, I know I'm very long-winded. Just one last thought is I think that's actually super critical, right? So if you look at the positive flywheel against Silicon Valley and whatnot, very critical for employees to get rich, right? Employees need to be able to get rich with large exits, so they can go out and feel comfortable found their own companies, and also invest in the companies of their friends and their network, right? That isn't really happening here, right? ESOPs are usually a little bit smaller. Equity compensation has only been getting more popular over the last couple of years, and the exits are.
Doesn't exist in the Japanese system.
Yeah, no, it's super hard, right? And the Shintake, SO, whatever, that ran into a ton of trouble if anybody's followed the news and in the industry, right? It's supposed to be tax exempt, and it turned out to be not, right? Which is colors to show.
And the tendency of VCs or CVCs also is that they push for you to go IPO. That's the tendency.
Yeah, because it's low risk, it's comfortable. You get your money back.
Fuji's strategy
Yeah.
to hit that target that makes your LP happy enough so
Yeah.
you can go again.
It's all coming together, folks. Right?
I'd like to ask, since you have done this research, if there is a viable alternative to VC in Japan, but there might be a better follow-up question.
It's just because as an European that, even for me, VC feels American. It's a little bit foreign DNA, but for me, it feels like I'm embracing an American concept. It's a little bit uncomfortable. We can kind of do it, pretend to be comfortable with it. I feel like Japan cannot really embrace it. Most definitely is not comfortable with it. But is there a viable alternative? Because something has to be done, right? Otherwise, you'll just stay down and fizzle out. But it doesn't have to be a foreign concept, does it?
Let's take that question real quick.
Is
and
that
then
all right?
If anyone in the audience has questions to ask.
Right, maybe
Yeah,
just
yeah.
based on your research.
So the concept of startups or entrepreneurship is not new to Japan. Let's get that out of the way. It comes in different waves, right?
That's so important.
Yes.
Can you repeat
yes.
that?
Yes, the concept of entrepreneurship and startup is not new to Japan. It comes in different waves and in different definitions. So, for example, one wave was the family owned or the family passed down to the family kind of startup, if you will, where it was funded by the family, right? The 3 F's: friends, families, and fools. And then another wave, and then the secondary wave was the executives that went abroad and got educated and got the MBAs. Those are your Globus, your Rakuten, and your whatever. So they went abroad, saw what was happening, got excited, came back, brought it to Japan, started, did it. So the different definitions. So I think there is an answer. I just haven't found it yet, and I think Japan also is looking for it. That's a great question. It's an excellent question. I think we will find it eventually, but it's not going to be what we traditionally think it's going to be. Where where we would hope that there's well-based angel investors that are able to invest and understand what they're investing in, and then there's venture capital funds that are big enough to be able to invest. Yeah, I think it's going to be quite different. I haven't found it yet. I'm looking.
Cool. Thanks for all your thoughts. So before we wrap up, I think because we're running a little bit low on time, there's one final question I want to ask each of you. But before we get to that, anybody in the audience have questions? And
So thanks a lot, guys. This has been great. You can probably hear me without a mic. Everything's. I really love the questions, and the answers have been very descriptive in their nature. I think just by necessity. I'm looking for something maybe a little more prescriptive. And when we look at the Silicon Valley model, the prescription is so simple, which is just to be awesome, just to make something really awesome so that no one can ignore you. And that's it, it's so simple. And so everything you're saying ties into, I think, a consistent fabric. Like, for example, someone said it's not fully capitalist here, that seems true. People tend to not get sufficiently rich from IPOs to become confident angels, that's also true. And everything just sort of ties together. And I'm wondering, is there a prescription that comes out of this? Can you guys synthesize together what you should do? Like, suppose I find a way to raise money, right? And I get past the seed stage, okay, with US investors, and I start making something awesome. What's the thing that's gonna stop me from being successful, assuming I do that? And can you prescribe me a way around that problem?
What's your goal?
To succeed.
Can we define, is it as a foreign startup founder? So is it, what can you do as a founder to succeed, or what can Japanese society do to fix this problem?
Yes, what can I do as a founder to succeed?
So I'll tell you, and I don't know if this is the right answer for you, but I recently was talking to a gentleman at Venture Cafe, and said he had this great idea. It sounded great. I love this idea. I won't say what it is, but the first question I asked him is why Japan? And he couldn't answer that. So if you can answer that, I think it'll lead you to other answers.
I really like your answer. I don't want to interrupt you, but so I feel that the problem with that answer to me is that it belies a problem. So like if I give you the two presuppositions that I'm able to raise capital and I'm able to make something awesome, why isn't that enough?
Ooh, good question. Yeah, and again, why?
There are a lot of things that lead to startups being funded. So I'm assuming here that your goal here is theoretically, you're trying to build a unicorn, you're trying to build a globally relevant company, you're trying to win the space, win it all, right? One thing that has been a challenge, I love Joe's answer actually, right, is you're going to be asked why Japan a lot of the time, and you need a good answer. So I did a founder, I'm not a founder, right? But I did a founder focus group at the end of last year. And one of the founders in the group was extremely blunt. This guy is brilliant. He was like maybe you'll see it, don't know. He's like a Columbia University like plasma physics PhD. He was the head of data science at a New York-based startup that actually exited, right? And he's like doing this startup here because his wife got a job here, wanted to support her, etc. But long story short, he was like, do we have a stink attached to us because we're based in Japan, right? Because people outside think that we're just screwing around here and we're probably third rate, right, for being here, right? Is the outside perception. Very blunt, right? Second thing is, and then domestically, we're not trusted because they're like, why are you here? Are you really committed to this place? Do you speak Japanese? Yada, yada, yada. And so like, you have a challenge on both fronts there. I think this is starting to change, right? Again, I think local VCs are coming around to international startups. There's a pretty strong track record of foreigners doing startups here that have exited, Payday, for instance, exited for $2.7 billion, an M&A to PayPal, consumer fintech that seems to have a lot of foreign founders for some reason that have done really well. But at the end of the day, there is a case to be said, talking to some founders, they're like, doing a startup in Japan is like hard mode. Why would you do it here, right? On the other hand, there are people who are here because there's part of distribution, because they have part of go-to-market that makes sense, starting from here, elsewhere to Asia. They're leveraging specific assets or partners or whatnot here. One other thought I have is I've met founders from in places like Taiwan that raised from Sequoia, from ParaVC, yada yada yada. They've been able to build complete global teams, right? And get a lot of interest from global startups. It depends a lot on your positioning, right? So are you looking to build, if you're looking to build a domestic Japanese business, there's a way that you play, and you play with the constraints of whatever that we're talking about. I think if I were to be prescriptive, hot take, gonna get me in a lot of trouble, is there is a play which is to ignore the Japanese startup ecosystem, try to raise capital from elsewhere, try to position yourself as a global team, get a remote engineering team in Eastern Europe, right? Get a sales and customer success team based in Utah, right? Go leverage XYZ, go use Shenzhen for hardware prototyping and whatnot, right? One good example of this that actually is a Japanese founder here who was the previous founder of Grotzo, and then is a serial entrepreneur, now started a company called Joseph. Very interesting. My understanding is that he's treating his Japan team, despite being a Japanese founder, like a international tech company would treat Japan, which is to say that engineering team in India, Japan is just the local sales and customer service success office, right? And then product team is in California, right? So again, it depends on how you're looking to do. If you're doing something in Japan,
which is what U.S. companies typically do, right? Is they're successful in the U.S. and then they just open a sales office here.
Yeah, and Joseph is killing it. Their net revenue per retention is like 130%. They're like tripling their business every year. And it feels a little bit more internationally organic.
You want a prescription? Are you B2B or B2C?
Well, both.
Pick one.
Let's say B2B for now.
All right, you need a beachhead, right? So let's go with B2B. All right, so in any other market, the strategy is to be awesome, to find the pain point and solve it better than anybody else, right? Obviously. It doesn't work in Japan. I've been selling awesome software, best in class everywhere else in the world for 15 years. And it doesn't work because you're assuming that you understand the pain point, or you think you know the pain point, but you don't understand the customer's true pain points, because it's not necessarily revenue increase. It's not necessarily that they want their company to get more market share. It's not necessarily that they want to be promoted even. Your end buyer isn't one buyer, first of all, it's a team. Everybody has to distribute responsibility for buying whatever this thing is that you're selling. So you have to understand the complex strategies that they've had in play individually for the past 20 years, and as a company, probably for the past 60 years, on a 300-year strategy. So understand the customer, and don't apply your global assumptions to what their pain point is, and don't take their first answers to what the pain point is. You have to invest in building a relationship and truly understanding. Are you selling something that's going to help, Tanaka get slightly forward, Tanaka-sen, sorry, so get slightly forward on an initiative that he's been building stakeholder alignment for like the past 10 years? Will that slightly move the needle for him? Good. Maybe you have a chance there. Maybe you have an internal champion that you can build there. But only if it aligns with Suzuki-san's initiative that he's been building for the past 3 months. Suzuki-san's more senior in this scenario. So this is my strategy for selling B2B software. Go in and understand your stakeholders so well that you are writing the dingy show for them on their paper. Because if you can't go in and provide them with the dingy show so that you're getting stakeholder alignment, you're useless to them. And they'll forget you pretty easily. I mean, they'll toy with you for a while, but you won't get anywhere. And now here's the other prescriptive strategy when you're actually trying to sell B2B software. As quickly as possible, find the biggest skeptic in the company that matters, and answer every objection, every question they have, and dig out more questions. And by the time you get Watanabe-san's every single question answered, you've won the whole company. Because everybody knows that Watanabe-san will never buy your software. But if you win him over, and you will, if he's a real skeptic, you'll win him by answering every single question. It's going to take you 18 months, but by the time you've answered every single question, you've won that deal. And you've probably won it for 30 years. Would you like the B2C prescription?
If we still have time, I don't want to take the floor this long.
I think B2C is much more about sentiment. And so you actually have to win the hearts and minds of your end user. And you can only do that by providing value in the way that they perceive. And that's a little bit difficult. It's intangible. Sometimes it's through creating an influencer strategy, people that they trust. If they're buying your product and they're recommending it, then you have a chance. But to summarize, B2B is find the skeptic, answer every question, help him write the Lindy show. They'll be your friend for life. B2C is win the hearts and minds of your customers.
Easy, right?
Now we can see if there are more questions. If any.
We do have. Do you have a thought?
Yeah, just if you've actually managed to raise money and you actually have an awesome product, you probably have about assuming you have a global strategy in mind, you probably have about as good a chance as any startup anywhere. That I think the challenge might be to raise money with an awesome product in Japan. So it's about getting to that stage. That's where you're playing hard mode. It's probably easier to raise money with an awesome product in a lot of other places. But again, I think it's most certainly possible. I might just add, when I'm looking at Japan as an investor, because it all comes down to everyone is telling stories to someone, and I have to tell stories to potential LPs in Europe and in Japan, and it all has to make sense. I very much drill down and focus on areas where it feels like, yeah, that makes sense in Japan. For instance, climate tech. You know, you can tell a whole story about how Japan has been battling the environment for hundreds of years. Japan, for lack of natural resources, has been forced to be good at optimizing. You know, they don't look at it maybe as sustainability, it's more about optimizing, but it's the same, different sides of the same coin. And also when it comes to climate tech, you know, I think global climate tech investors care less about how awesome the founder is. It's fine to have a super nerdy founder as long as the product actually works. Climate tech investors understand this is a global problem. It doesn't really matter if we find a good product in Japan or in California. So I've decided to pick a focus where, you know, you can avoid that particular challenge in Japan and where it's more of a strength. And as a founder, again, at the very beginning of your entrepreneurial journey, probably also need to pick the right sort of, you know, does it make sense for a foreigner to be trying to build this particular type of startup in Japan? If not, it will be difficult to raise a lot of money, even if you have an awesome product. So you have to get it, you know, it's, yeah, it all just has to make sense. But again, with grit and a little bit of luck, anything is possible. And again, if it's tricky to raise the money here, if you have an awesome product, dare to think bigger, global. You know, you can always, towards an international US investor, European investor, frame Japan as, you know, yeah, again, we're here because it's you know, from Japan, we provide amazing service towards our clients, and, you know, but don't let Japan define you, unless you have to. That's not much, that's just rambling, but some thoughts.
Thank you. I have a follow-up, if it's okay. So, do you think things are changing substantially in the sense that, so Evan's answer was a lot about Nemawashi, that just being awesome is going to be enough in a future Japan, let's say 10 years from now, in a large enough segment of the ecosystem that this won't actually be the nature anymore, and that it will sort of shift to what we're more familiar with from the seminars that come out of Silicon Valley and places like Y Combinator, where the prescription is incredibly simple, largely capitalist, and transformative.
So I have a quick take on this, right? And I actually really liked Evan's series of advice, because I think it gets to the core of why it's hard in Japan, and that's distribution, right? And so, like, you know, you talk to a lot of people, you know, the speed to revenue, enterprise sales, et cetera, it takes a lot more time in Japan. And the reason why it works so well in Silicon Valley, right, a lot of the time, you know, it's almost a joke about YC, which is like, it's actually just like money laundering. They fund a bunch of startups and they just sell software to each other. And then suddenly everybody has 100K ARR, and you're like, oh, everybody has traction. It's just them selling their SaaS to each other, right? And it's like, oh, look, we're so good, right? And then they go and take the traction and like sell to other people.
Well, I mean, there's still like the total market cap of like the companies that have exited out of there is over $300 billion.
Yeah, no. So it's real. No, but it's like it's the starting phase, right? That's really hard, right? And you know, selling to enterprise level, all the, you know, the McKinsey had a report on how addressing blockers is a lot more important in Japan, even more so than finding champions in the enterprise, as is the case in a lot of other places. So my personal take to directly answer your question is like, I think it's probably going to get easier, and you know, the changing environment, you know, demographic shifts, need to adopt new solutions, labor shortages, et cetera, is going to drive some sort of adoption, and therefore like easier distribution of good products. But I would say, you know, my personal take here is also like the ingrained incentives, organizational structures, habits, procurement, et cetera, probably isn't going to change quickly enough, or it's not going to become the US, right? It's not going to become Silicon Valley. You don't have the same kinds of networks and everything that underlies assumptions about, say, like procuring software
So
or
like,
such.
what if you pointed your lens towards Japanese unicorns like Smart HR or Free KK, Money Forward, Sansan, companies that might have structurally a different culture in the sense that they were born relatively recently, they've become big relatively fast. There may be people inside, to Evan's point, who do have the target of getting that promotion or increasing ARR or some other metric that is aligned with just being excellent.
I'll pass it on to somebody else. My own personal take is like, how many companies are there like that? Is it enough to support a market? And second thing is like, what are their procurement processes? I've never sold to those people or tried to sell. I've done more traditional stuff, so.
Last follow-up. Yeah. But good question.
Well, bear with me for a moment. Put yourself in the place of the last 6 prime ministers of Japan. Quick thought exercise. You know the incumbent entrenched system is no longer viable. You know it has to be shaken up, and the best way to do it is by startups. You know that you have to pay lip service to promoting startups, but you also know that if you did that, and if you shook up the current, not just companies, but also all of the mom and pop zombie shop, zombie companies that are providing Japan's social security net, you would have to take the responsibility for the social security net onto the government. You know that might be a good long-term strategy, but the moment you enacted it, you'd be voted out. What are you gonna do? If you're Abe, you come up with a great marketing campaign about 3 arrows. You recycle a lot of what Koizumi did. And in the end, you undermine every effort so that no actual traction is created. If you're the current administration, you bang the drum real hard and come up with a lot of interesting strategies, and you enact one that actually helps startups. You give angel investors a little bit of a break on taxes, but only if they invest in individual companies, not funds. So you're distributing the risk, like, the French model or German model. So you create a lot of noise about doing something, but you don't actually do anything. So this gets to the heart of the problem. We have companies utilizing systems that keep them in power and keep the government in power, and it's a symbiotic relationship. And it's been entrenched since 1976. How do you change that? If you change that, then awesome wins. Because then you can shake everything up. So what do you do if you're the prime minister?
I want to be a little more optimistic.
I'm not saying it's something pessimistic.
I know people in the government who are, I think, doing it in good faith, who are trying. I think Brad Ito, who's like in the cabinet office, who like holds a lot of the government budgets, has actually been pretty transparent and like trying to help. And we're bringing things like Techstars, Optimist, whatever, folks in to like try to actually push things forward with real budgets. But I think it comes down to procurement. It comes down to customers, right? Like funding gets you only so far. You need real people using your data. And I think the reality is that currently it's easier to get customers elsewhere. I was talking to, if you know him, like Matt at Shizen Capital, Matt Romaine. I mean, he talked about like when he was the founder of Gengo, like one of the biggest kind of predicaments they had was every dollar they invested
Outside Japan got more bang for the buck, right? They were like, we're in Japan, like we love it here, we're based here, etc. But every single dollar they put in marketing and sales outside the country got them more money back. And they're like, should we be here? Like, but I mean, they end up going with it, right? Trying to build like a cross-border team, etc. And so like, I would look out for real movement on that end, and see if procurement gets easier. And The thing is, like on the B2C side, you do see. I will say it's possible. Like, look at all the successful international tech companies here who are like dominating, right? And it can be figured out. And like as to Evan's point as well, like procurement can be kind of idiosyncratic. As well, I've seen a lot of companies people get early traction because they were the head of sales at some U.S. tech company, and they just had a lot of friends, and everybody just bought their thing, even though they had no idea what it was used for, right? And so like not product market fit, but you gotta start moving it from there. Not sure if this is helpful. Yeah, let's move on to the next one. But thanks for let's move on.
Okay,
I'm just worried that the beer might be getting warm.
All right, Steven, you had a question.
Yes, hello. I have some of the boring questions. For example, we heard a lot about funding, but how about formation of an entity? Would you suggest to do a GK or a GG versus KK or a GK at the beginning, or what's the kind of best example to do a presentation for equity and just kind of have and such? Does that make sense? Or does it explain it?
what company structure?
Exactly, yeah. Yeah, you have any kind of background or like welcome and pitfalls that people kind of kind of go into and kind of out there one another. Not really.
Sorry, can you repeat the equity point?
Yeah, so in the USA, for example, we have corporations and LLCs. So depending how you want to divide the company ownership or equity, one's easier than the other. For example, corporations, you have to do also much more finessing or much more work on reporting. It's, for example, 100 minutes. While LLC, you don't really have to do that at all. You just do annual report and that's it. While I think in Japan, depending if you're a GK or KK, it's going to be very different as such.
The different entities are created for different purposes.
Every single startup I've seen has been a KK.
Okay, okay.
Yeah.
Yeah, that's the short answer.
Yeah.
Okay. But also, they're not created on the American model. The Japanese corporate code is modeled on the British model. And so every share that you sell has to be directly tied to the clear valuation of the company. And that's the big problem, because there are no theoretical valuations, right? So the number of user acquisition or the number of clients you're acquiring or whatever, that's not your valuation. Your valuation is the cost of the desks and the computers, right? So it's not the Silicon Valley model. If you want to structure in an investor-friendly model, you might have to start with a KK and then go with a Delaware corporation.
Yeah. Dual entity structures are possible. So I see a lot of like Singapore, also when people do like BVI and whatnot, but it's usually just Delaware Singapore's. Yeah.
Okay, one question. In the end, aren't all these problems that we've been discussing, the VCs not investing, the people, the graduates not going into startups, the government not changing, just a consequence of Japanese itself being a risk-averse, I'm sorry, I hate that word, culture? And is there actually, if that's the case, do you feel that there's a solution for that, other than just waiting another 3, 4, 5 generations for the mentality to change based on magic?
Yeah.
Okay, thank you.
I mean, well, yeah, it's you guys.
Yeah.
You're the change agents. What I was saying earlier about the government, that wasn't pessimistic. I was just setting up the pain point. You guys solved that problem. You solved a hugely important problem. For currently the world's, what is it, still third largest, fourth largest GDP? By next year it'll be 6, but we can recover from that.
Almost a follow-up question to Paul. If finance is a free market, global free market, why, Tobias, are there not more companies like you trying to make a venture fund here? And that could inspire, and that could lead actually to other Japanese venture funds to follow. This example, no? Could that not be the way to change the system?
I mean, the reason I'm here is not because it's the easiest choice. Most people might not, and most people who are only driven by some kind of cost-benefit analysis might not pick Japan. I'm here because, you know, I feel like if there were aliens looking down on Earth, they'd go like, hey, why are you not, there are so many good ideas in Japan, which are stuck in Japan, not solving global issues, challenges. Why are you not trying to do something about this? So I'm not only here for financial reasons. If that was the driving factor, honestly, I might go somewhere else. I feel like it's, even as a Swede, I feel like it's good for Sweden if more Japanese solutions to global challenges could be put to work outside of Japan. So there is something more to it, but it's far from a pure financial reason for doing it. Then again, I think there is the financial opportunity as a foreign investor investing at relatively low Japanese valuation levels. If you're able to help those startups become investable to international investors, you could move those startups to a relatively higher valuation curve. There is arbitrage there, which is one of the financial arguments I have to the potential LPs. But it's gonna take time and a lot of hard work that most investors, I think, are not willing to put in. But maybe we can show them that it's worth doing. And by being the first seed stage, I mean, I wanna do it in the seed stage. Most investors might not feel it's worth the time and effort, but they might consider doing it in a Series A stage if there's already an international investor in that startup. So to be that bridge, help with all these contracts and show that the language barriers are not a pain in the ass and so on.
One thing I would highlight here though is
people are looking at Japan now, right? There's a lot more interest. I'm getting a lot of inbound calls, including from like tier 1 funds who are looking to explore Japan, including like some pretty big names like Next Week, right? But like Kozla Ventures, which is like, you know, basically Silicon Valley Broly started like investing in Japan. So it is happening. And to go on, to add on to the point just now is, I mean, there's a saying in venture, right? To make money, you have to both be contrarian and right? And so that's kind of the bet on Japan, and it has been for a long time. I will say, like, the reason, like, just why people have been liking Japan, a lot of it's narrative, right? And just like familiarity. And the narrative for Japan hasn't been right for a long time. It's just like, oh, it's a old, decrepit, shrinking market with terrible demographics and hasn't grown, and the stock market is depressed. A lot of those things have changed, right? And you have things like, you know, US-China decoupling, which is driving a lot of capital flows, and you know that needs to find a new home, possibly in Japan. And there's also anybody here from Indonesia? No, okay, but like, you know, there's some markets that have like gone through this ebb and flow, right? You know, there's a lot of hype in the 2010s about Indonesia, and some of that has worked out, but a lot of it hasn't, right? And so, you know, what are people looking at next? And so, like, where else in Asia? You have the APAC fund, you have money earmarked for this place. It's starting to look into Japan now.
Cool. And I think we have time for, let's say, you'll be the last question. We have one question here. Actually, before you pass on the mic, one question here, and then you'll be the last one.
okay.
Cool.
All right, so my question is a little bit out of topic maybe. So I'm the policy consultant, and so my question is quite simple. So do you find any difficulties when you deal with the Japanese government, and what kind of like policy you want like Japanese government can do for startup?
Who has dealt with the government?
I just had a meeting with Jetro today.
They have some good people.
They do. And I'm gonna have more follow-up meetings with them actually because of today's meeting. Okay, so I talked to Jetro based on the startup ecosystem, but I also talked to Ministry of Education. I'll tell you something that's interesting. I don't know if any of you know this book, but it's called, oh my God, I just had it on the tip of my tongue. Something of Yen. Princess of Yen. Yeah, that's the name of the book. Anybody know the book, Princess of Yen? Okay. So it was written by an economist years ago, and it's mostly on the economy of Japan, right? So it's based on the economy and the growth and blah, blah, blah. Almost like Ray Dalio type of book. And one thing that he wrote about and that he discovered in his research is that many of the ministries, and sorry to bring up bad memories, but many of the ministries in Japan were flooded by ex-military generals and such. And so that mentality went right into into those ministries, and one of them primarily was the Ministry of Education. so there you go. And so it's so ingrained, a lot of how the way they think and do things. And I'm not saying it's right or wrong, you know, it works. And so it's gonna take time, 10 years, I hope, if you're optimistic. But one of the difficulties with the government is that they have these great ideas. The 3 arrows, that was great, I love that. Yeah, the 3 arrows. More recently was the 10-year plan, is that what they're calling it? Where they're gonna help startups. Yeah, what was it, the 10-year plan?
New capitalism?
Yeah. So they have great ideas. The problem is that they're created from the mindset of a domestic mindset. And if anybody's from here, please don't uninvite me, but TIB, Sushi Tech are similar. I contacted them when they first started up, I don't know, 2 years ago or so, and I offered my services, offered help and all that. I said, I 2 years later, they get back to me. You know, I finally got a meeting with them. But that's where you're gonna see a lot, is when you're dealing with the Japanese government, a lot of what they've created is domestically minded. And then later they figure out, how do we go global, or how do we make it global? That comes, it's an afterthought.
Yeah.
I'd just like to, super quickly, this is part of the reason why we are setting up not in Tokyo, but in Kansai.